Welcome back to Yuri's Box. In this video I'm going to look at Bitcoin, Ethereum. If you like this kind of content, consider leaving a like. And as usual, nothing in this video is financial advice. So really, in my opinion, there are two ways you can interpret the current price action we see in Bitcoin right now. So as I've said many times in my previous videos, my current state of mood is one where I really try to ignore the technicals. Like for instance, if I had to look at what we're having right here, the bear in me would say this is a bear flag. Okay, but given the state in which we find ourselves right now, like in an hour, Trump is about to speak, all right, and give an announcement on tariffs. If it's somehow great news, well, forget about your bear flag, all right? Bitcoin's going to reverse this in a heartbeat and probably go up above 90K, just like that. If, on the other hand, you get Trump, painting a picture that is a bit more negative, probably going harsher on the tariffs. But again, I made a video on that. But in any case, it could confirm the bear flag. So I don't really try to look for the technicals in the short term. For the long term, what is going to happen in 6 months, all right, 12 months really, I think you have two really major cases you can make, and one is for the bulls and one is for the bears. So in this video, hopefully, there'll be something for everyone really. And I'll start off with the bull case. And as I've written down here, there are really two things you can point towards: 2017 and what you saw in 2020, or in Q4 of 2020. Now, starting with Q4 of 2020. All right, this was actually Q1 of 2021. Actually, I mistook that for Q4. But in any case, what you saw in Q1 of 2021 was, Bitcoin coming off of quite a significant move here. From say the bottom of the COVID, 950%. All right, but at this local high, Bitcoin put in a 30% decline. All right. Now, if you're shocked at Bitcoin putting in a 30% decline, well, that tells me that you haven't been in crypto quite a while. That really, this is everyday volatility for crypto. I mean, this is why you want to be in crypto in the first place, really. This kind of volatility, 30%. Coming back to today's price action, that is roughly what you've seen, if I'm not mistaken, from the peak right here to the bottom. It's exactly 30%. The decline we had from 109 to 76K is around a 30% decline. Is it shocking? No. Would a 30% decline indicate that the bull market is over? Absolutely not. 30% declines are basically your 0.5% to 1% declines in the stock market. I mean, they happen. Do they invalidate the bull market? Absolutely not. All right. So that's one thing you can look at. The other example is 2017. Hopefully I got that one right. I didn't point to some different time frame like I did in 2020. So what did we see in 2017? Something similar, actually. Right here, we had a 40% decline. And this was right smack in the middle of the 2017 cycle and 2017 bull market. So in the middle of that, we had, again, a 40% decline. Did that invalidate the bull market? Absolutely not. Next up, more of the same, another 40% decline. Did that invalidate the bull market? Absolutely not. After that, Bitcoin went, straight up for basically, the rest of the year. And that really is the bull case, in my opinion. There's no need to make it any more complicated than that. For the simple reason that this is what happens in crypto. This is what happens with Bitcoin. 30% declines are, breakfast. It's just the nature of the asset class. Massive swings, and you shouldn't really be shocked at these massive swings really. Now, it's going to sound quite simplistic, the way I laid it out, but if you're a bull, and, history shows that it pays to be a bull in cryptocurrency, and, well, Bitcoin at least, which is quite different. If history is an indication, again, of what happens in bull markets, this is a buying opportunity. If, you married the bull case, all right? And you look at these declines, this 30% decline, as something that's normal. And honestly, you have history on your side. Honestly, it wouldn't be a bad call. Now, the bad case is really the only thing that seems familiar and eerily familiar to me, given the size of the moves that we've seen, and given kind of the backdrop that we have, on the economy, which may or may not happen. But again, there's something for the bulls and something for the bears. What happened in 2019? So after the peak in 2017, we had, a big decline until, basically 3.5K, something like that, 3K. After that, you had a huge rally of about 340%. All right, right here. Fast forward to today. You have your bottom, and you have similar returns of 370% rally. Not exactly the same, but not totally different. After 2019, and again, just before we move any further, if you don't already follow Benjamin Cowan, make sure you follow him. I mean, he's really the best when it comes down to Bitcoin. And, I personally follow all of his videos. And again, this is just me giving my opinion on how I see things going, and, trying to give a balanced view for both for the bulls and both of the bears. So after this, this 350% rally, we had really a downward action, all right? Slightly sideways to downward action, price action. Fast forward to today, you have downward action, and about, again, right here, this 30% decline. What followed this is a breakout of the downward action. And what we had right here is about 120% rally, all right, following the breakout. What happened in 2019 isn't exactly the same, because from the low point, which would be a breakout, we had a 60% rally, which is exactly half of what we saw this time around. Now, what could be a possible reason to why, the move is exactly half of what we saw this time around? Well, in February of 2020, if you were alive in 2020 and you were following the financial markets, you'll remember that that's when the COVID started circulating. So what we saw here if you wanted to paint a parallel universe, is, well, really this move getting interrupted by COVID, and in a parallel universe this would have potentially continued. Maybe, just maybe, this move would have been 120% rally. All right, just maybe. But again, that's not the point of this video. What followed that was a decline of about 60%. All right, so a 60% rally from the breakout up to this local high, and a 60% drop, which actually put in a slightly higher low compared to the 2018 low. Now, I'm not suggesting that by looking at history we're going to have 120% decline. Absolutely not. But given where we are, I'm not arguing for a pandemic. And as I said before, and when I've been looking at things like TLT, and the eerie comparison to the price action you see in the 30-year yield, what we see today and what we saw in 08 is really similar. I'm not thinking that will happen. But given all the turmoil we see, could there be the potential for further downside? Given the fact that we also see things in economic data point to some kind of softening. Now, again, it's nothing too dramatic, as I've said in my previous videos, but it's still something to consider. And for the sake of really comparing this part of the cycle to what we saw in 2019, which again, as I've pointed out, there are some things that have been spot on, and some other things that are kind of eerily similar, like this being a 60% move and this being a 120%, or the other way around, really, move, one being exactly half of the other. But again, coming back to the comparison, what we saw after this high in 2020, in February of 2020, we saw a decline, about 60%. A decline of 60% would put you at around 40K. What would cause that? I would see that being another 10% drop in the S&P, something like that. If the S&P drops to 20%, that could make sense to me. All right. But again, it is all hinging on the idea that things in the economy are worse than potentially people think they really are. And again, the only way you're going to find that out is by just waiting and seeing how economic data comes out. And potentially, wait 50 minutes and see what Trump announces. And after that, we have non-farm payrolls on Friday, which will definitely be another milestone. But again, as far as I'm concerned, I'm not really waiting for this week or next week. I'm waiting until the summer. I know that's boring, but I do think it's a matter of having patience, seeing how things work out, and just wait and see. Wait and see, have patience. Don't get shaken out. It's kind of the moral of the story here. Just know that, there's probability for both things playing out, honestly. It could easily be, as I said in the beginning, in the first half of the video, that we're in a 2017, or let me fix this right now, a Q1 of 2021, where again we saw 30% declines, 40% declines, and nothing happened. Everything just went on its merry way. On the other hand, you do have, in my opinion, a quite eerie similarity to 2019, where you had a breakout. Now, again, these things seem very, very different because, again, if you're comparing, what was this? 60% of, 6K, of course, that's going to be less than, even 60% of 48K, really. So the moves are going to be stretched out and bigger percentage wise. But again, what seems eerily similar to me is the fact that this move right here is exactly double of what we saw last time. And again, one of the ways you could rationalize it is that right here, this move got completely wrecked by the pandemic. And potentially we could have seen something similar play out until maybe, resolution coming more later on in the year, given the fact that we had problems in 2019, way before the pandemic. But again, that's just, as again, Benjamin Counter would say, that's dubious speculation at best. So I'll leave it at that. I think the biggest the biggest scenario bears have to point out at this point of the cycle is 2019. A stretched out version of 2019. All right, something that has taken way longer than people that would have expected just in 2022. And potentially a resolution coming up in the next months, possibly the summer. What is my opinion? I have absolutely no idea. I follow mainly the, kind of the macro and, surveys and economic data and indicators. If you've been following this channel, ever since I started making videos a month and a half ago, you know what I tend to focus upon. And really, everything else is a consequence. That is usually how I go about things. As far as I'm concerned, my main suggestion is at this point, really try to keep away from the technicals. All right, don't put too much faith in the technicals, in my opinion, at this point, because you can easily have Trump tweet at 3 a.m. something crazy and invalidate everything. All right, that's the world we live in, as far as I'm concerned. So no, the bolts have to point at 2017 and 2021. For business as usual, really. Nothing to be scared about. The 30% decline is nothing to be scared about. And the bears have 2019 on their side, which again does look eerily similar in my opinion. It's it's interesting to say the least. I'll leave it at that. You can make your opinion. If you like this kind of content, consider leaving a like, and I'll see you next time. Keep an eye out for Trump in 45 minutes. Bye.